Economist here. So I've been giving you guys a lot of lumber update videos lately, even though there's not a lot taking place within the lumber industry as far as activity or price moves or anything like that. But that's kind of the point of what's happening right now, is that it's a lot worse than I had even realized. More than the idea that there's curtailments and inventory depletion and anything under 550 per thousand on the lumber future prices, and a lot of these mills are just not profiting. But it's even worse than I had even suspected. Now, as we go through some of the information and understanding of the situation we now face, many times we are going to find that people are saying it's manipulation and greed and all this other stuff that's going on out there. It really comes down to supply and demand, right? Supply demand imbalances that are taking place right now within the lumber industry is creating devastating situations. Now, I'm going to share with you some of the situations we are now facing throughout different parts of the nation. Many of you know that I get a letter, a lumber like news email that I get once a week, kind of gives me an idea of what it is that's taking place out there. And it's kind of more of the same, but it is telling of the situation. Now, first of all, this is coming from what area? I think this is coming out of the eastern part of the United States. It says producers are currently managing operations while facing 45% duties and tariffs, a situation expected to lead to further curtailments and shift reductions at the mill levels. Now, this is something that is not new. This has been continuing, and this is going to get worse going into the future. And they're promising that unless something dramatically changes, this is the situation we are now facing and going to face going into the future, is even more curtailments and inventory depletions. This is coming out of the Western Species of Dry Dimension. It says, at the mill level, there continues to be suspended or suppressed production, and it continues to impact current availability. And now this is something that I've tried to share with people out there. Many times you can't necessarily see this unless you are actually in the industry and you are in communication with vendors and retailers and distributors, sorry, and distributors out there, in order to get a clear understanding of what it is that's taking place within this industry. Many times the bullwhip effect is now like running throughout the lumber industry, in which that you will find certain products have plenty of supply, while other products are sitting almost completely empty. Now, it goes on to say this: we don't expect demand to change much from now to the end of the year. However, we are expecting total availability to become even more hit or miss as we move through the holiday time frame. And so again, it's just, telling of the times. What I really wanted to share with you though is information talking about the lumber tariffs and how it's impacting these Canadian mills, because they are now at rock bottom price. If this doesn't shut them down or permanently shut them down, I don't know what will. Now, listen to this. November hit a low this week of 497 per thousand, 497.50 per thousand. Now, I think it closed just slightly above 500. I'm sorry, I didn't check out what the exact number is, but right now it closed yesterday. It's just slightly above 500, so not too far off from what this is referring to. All right, so November hit a low this week of 497 per 50, or $497.50 per thousand. If you take $112 off that figure from the Chicago back to the mills. Now, this is important to understand because lumber futures changed a few years ago, in which that now there's an added rail cost from the central hubs up in British Columbia area out there to Chicago. So this added rail cost is now figured into the futures price. This is one of the reasons why it's now hovering up over 500 per thousand. Many people will say, well, no, the prices were cheaper back in the day. If you take out that added rail cost, you're going to find that the lumber futures right now are trading significantly cheaper than the 500 per thousand that most people are looking at, not incorporating that added rail cost into it. All right. So even though it's at 550 per thousand, the added rail cost really pushes it down into the 400s or even 300s. Goes on to say this, right? It says, if you take that $112 off the figure from Chicago back to the mills, we are buying wood at $385 per thousand. This is at the mills, right? These Canadian mills then have to pay a 55% tariff on the high end. Not all of them, but on the high end, some of these mills are all the way up to that much, 55%, okay? Which puts them at roughly 173 per thousand. That's what these Canadian mills are now facing. That is rock bottom in the market. Mills cannot sustain sales at 173 per thousand. Now, that's exactly coming out of a lumber newsletter that I have been getting for years. Right? This lumber newsletter gives us an idea of what it is that's taken place throughout the different parts of the country, and what it is saying about these Canadian mills is that they are going to suffer and die if this continues onward. Right? Think about that again. 500 per thousand due to the lack of demand, and you minus the added rail cost from the central hubs up in British Columbia down over to Chicago, and then you take out that 55% tariffs that are not on all mills but on some of them out there, you have 173 per thousand. Now, if you take 173 per thousand to figure out what that would relate to as far as like a 2x4 8-foot standing and better, right, that works out to about 93 cents. 93 cents. Right now, I sell 2x4s for like, I don't know, just under $4, $3.85. Right. But that's at 500 per thousand. And then you got transportation and profits and everything else that goes on within it. But yet here, all the way up in the British Columbia area, they're asked to produce, or being forced essentially to produce, a 93-cent 2x4 and somehow profit from that. Does it sound like it's going to happen? Probably not, right? Probably not. And now, as I find this interesting, is that people say, well, this is going to force the people into American lumber, right? Well, go and just take a look at what's happening with American lumber mills right now. They're not in any better situation. They're shutting down. In fact, I was reading an article about a lumber mill, I believe in North Carolina, been in operation since like the 1800s. You know who their main customer was? China and Vietnam. Well, tariffs have now shut that business down. Over 100-year-old business, family owned the entire time, right? Now shutting down operations because they can no longer participate in a profitable way, considering what it is that's taken place within this industry. It's now over, right? This is a devastated market. And when I think about what it is that's going to take place going into the future, that's going to somehow bring a demand back to the lumber industry, that will then have these producers of lumber manufacturing more and profiting and doing well, it's going to come from demand from home builders. Well, I don't see that anywhere in sight. And where's the demand from home builders going to get their encouragement to go out there and start building homes? It's going to come from buyer traffic, which I don't see buyer traffic showing up either. So thinking about what it is that it would take for the economy to be in a condition in which that the lumber mills would be able to operate, be in a profitable position, I don't see that anywhere on the horizon. And even if it was to switch today, right now, perfect conditions, you know how long it takes to actually create a house? From the time that you decide that you want to build a house to the time it comes into creation. Right? There's some people out there, I shouldn't say it doesn't take that long. Really, building a house really doesn't take that long. You know, the actual construction of a home. You know, there's some people who can knock out a house in like, no time at all, 6 weeks, boom, right? Totally done. Maybe even quicker than that. But ultimately, from the time that you decide to build a house to the time that it actually comes into fruition is anywhere from 6 months to a year, maybe even longer, right? That's if you're really moving on it. You got to line up financing. You got to line up subcontractors and, general contractor. You got to line up permitting process. You got to do a lot of stuff, right? And then a lot of logistics involved inside of building a house. And this doesn't just turn around one day. And so even if you were to create perfect conditions today, you're still looking at 6 months to a year down the road before anything really happens. Does this sound like a good time? Even if you were to change it today, does it sound like things are going to change today? I don't think so. Right? It's probably going to be a little worse tomorrow than it is today, considering the situation we are now in. So until you actually see conditions changing to be for the better, and then willing to wait for another 6 months to a year to get the initial impacts of that initial change, you see how far away we are? There's nothing that's going to change this and make it any better for anybody, but understanding the situation we now are in will give you a much better understanding of what it is that you need to do. Right? Because that's the whole point of all this stuff, is to figure out what it is that we need to do for ourselves, because there is nothing that's going to happen out there in the political environment or the banking industry or anything that is going to bring back any kind of real decent decent economy in the way that people would understand it to be. It ain't coming back, because even if they were to create the perfect conditions today, it would still be a year down the road before it happens. So it isn't going to take place. You know, I think about the tariffs and what it's really done for manufacturing in this country. Right? It was supposed to bring manufacturing jobs back. That's what the whole idea, that's what it was sold to. Everybody thought so. I had so many people coming to me with their ideas of tariffs and how they thought it was a good idea and all this other stuff. And I thought to myself, man, these people really need to understand the Cantillon effect. Once you see it from the Cantillon essay on economic theory, talking about the increase and decrease of money to the state and how that new money comes into the system and raises the standard of living and makes you uncompetitive against somebody who's sleeping on the ground. Like, when you are understanding of that situation, you will then look at it and say, man, there is nothing that they can do to bring manufacturing back, because we are not competitive in that fashion. Right? Like, we build great products, but we also have a high standard of living. And so therefore we demand a lot for those products. And if there's somebody else out there who says, hey, you know what, we can do something very similar, what do you think is going to happen to your manufacturing state? It's going to suffer, right? And this is the unfortunate situation we now face, is that people are very hopeful. They're wishful. They want to. Like, this is a company that's like, here I'm reading about this mill that had been in operation since the 1800s. Like, holy moly, guys, like, that's a long time to be doing essentially the same thing. You're producing the same product over and over again. There is obviously a demand for it if you can be in existence for 100 years and then over. Not competitive. Right? Never have been, never were going to be, if you kept raising your standard of living. Right? Now, if you kept your standard of living down in the one-room cabin, sleeping on a dirt floor with equipment out there producing massive amounts of lumber, and your standard of living incredibly, suppressed, and you weren't increasing your standard of living, then you might be able to stay competitive. You might be able to keep all those people employed, but they would have to have the same low standard of living too. Does that sound like a good time? Does that sound like anything that anybody is ever going to do? Like, I know for me personally, like, I would like to have a newer car. I would like to have newer clothes. I would like to have better food. I would like to have, better times, like, better entertainment out there, go and experience funner things. Right? I know I would like to do all those things. Does it seem reasonable that everybody else in the world would want that too? Of course it is, right? And if you have everybody else in the world who is wanting that too, then you're not going to be able to have a situation in which that everybody can increase over and over and over again, and then not have somebody come in and say, hey guys, you're doing a lot, but you're also earning a lot, and I don't need to earn that much, and I can do what you can do. That's it. It's over, right? And this is the unfortunate circumstances most people live in, is that they think, okay, well, now we can create a situation in which we can maintain this, keep it from deteriorating, keep it from, falling apart or collapsing or something like that. And that's not possible. And what that looks like is what we have now, is government intervention trying to, create a particular environment in which that everybody is going to be like okay and secure and safe and all this other stuff. And meanwhile, what are we finding but pain and misery and suffering as a result of it? Now, those who didn't fall for the gimmick, right? Those of us who are like looking back going, that ain't going to work. That is, none of the stuff that these guys are talking is going to work. And in fact, what we're going to see is ever increasing amounts of separation between the rich and the poor. And unless you are moving yourself into some sort of return on investment, like buying into rental properties or buying into assets of some sort that have a return or increase in price or something out there that's outside of just your dependence on your day job, then you're going to suffer the consequences. And by knowing that ahead of time, I didn't rely or think about what it is that the government was going to be able to do, because they couldn't. They weren't going to be able to do anything, right? And in fact, what it is that I saw was going to create this problem of inequality and have it get worse as it goes into the future. Like all the effort they tried to do in Portland to say, like, to deal with the homelessness, it was hundreds of millions of dollars wasted, gone. Right? And I thought to myself, as soon as they deployed the money, this is not to help the homeless. Right? It's not. It's to get money out there into the sluices and fill it in, because saving or dealing with the homeless is understanding that the circumstances that created the problem cannot be solved by throwing more money at it. The money was the problem that created the circumstance in the first place. And so knowing that and then seeing them deploy crap loads of money into them, like, are you guys serious? Like, you do realize it was all the deployment of new money that created this problem. And now, let's see, like, you guys have no idea what's happening here. You have no idea, and you're trying to figure it out. And because they assume what it is that's the problem, they literally deploy more of the problem at the problem. How late are we into the 17 minutes? I don't know how I drifted off the lumber. I was trying to talk about lumber and building. All right, let's read some comments here and see if we can maybe get back on track. All right, Brody, I have a crypto symbol in my name, Luke. All right, Standard Nursery. The only way to keep the economy from collapsing is by getting more UE subscribers so more people know the score. Haha, yeah, you're right, buddy. Thank you so much. All right, deplorable. Oh boy, here we go. The most important thing that you can do is realize that the government is going to double the prices of items in your economy every 4 years, so you don't start doubling your income. Okay, but unless you're talking about lumber, right? Or oil, or just about a lot of commodities out there. That's very like deplorable. I love how you're just so insistent on how it's the government's problem or the government's fault. Like, you put the expectation on the government saying, oh man, they're the reasons why we have inflation, period, end of story. But yet this guy's talking about price increases long before there was ever any United States government, right? Before there was even a United States. Right? This guy's talking about increase and decrease of money to the state. Didn't have anything to do with the government. Not a single thing. But, it's the government. All right? It's the government, not this guy who, came up with the reasons for it hundreds of years ago. Let's ignore that. Let's reinvent the wheel. Government, you're the reason. Plain and simple. End of story. Right? All right. Cryptos TFN? Cryptors? What's up, UE? What's happening? Jared, so did the commodities exchange or the Fed impose a cost on lumber traded to artificially inflate the price? Where did you get that? Did the commodities exchange or the Fed impose a cost on lumber traded? You do realize that I like, anybody can go right to the mill. Not anybody. You can go right to the mill and pay cash for lumber. You don't have to buy through a futures contract. There's a cash price. There's the futures price and there's a cash price. Those aren't the same. See, this is one of the reasons why so many people get very confused about what it is that's taking place with. Who you should follow is Keta, Madison's lumber reporter. She reports on this exact thing. She is in contact with all these mills and their cash price and what it is that they are doing. We have access to the futures price because that's what they're showing on the TV, right? That's the one that we can track. That's the one but that's only for a small fraction of the lumber that's out there, right? We can understand a lot by seeing that small fraction of the lumber. It's 2x4 green random length. It's very specific on what the futures contract is. There's actually more. They got a southern yellow pine futures contract now too, right? So there's actually more than one lumber futures contract that's actually out there being used. And so to understand that the lumber futures is guidance. It's not telling of the exact story. Because the exact story is each one of these mills are profiting and doing their own thing. You know what I'm saying? It's just like when you go to buy from this dealer a piece of silver as opposed to that dealer over there, they might look at their spot price and then say, oh, well, my markup is this many percentage, right? And so they aren't forced to sell at that particular price. They can sell it at anything they want. And so manipulate each one of those mills and say, oh no, even one of you have to sell it at this price, right? That's ridiculous. That's not the way it works. It's not even in the realms of possibilities. You know? Lumber futures are lagging indicator, to be honest. They're not. They are not a lagging indicator. They're a very telling indicator of the very current situation that we now face with the demand for lumber coming from home builders, from distributors, from the market in general. Like, this is a very, very telling story of what has taken place out there. The direction in which it's going and by how much is not something to be ignored. It's not something to be ignored. It's not something to say, Eh, eh. Not even. It is something that you should be hyper focused on every single day, looking at how much volume contracts, how much they're moving, how much they compare to the other months out there into the future. It's a very, very, very telling story. But as far as people's ideas of what it is that's taking place out there, as far as manipulation and all that other stuff, and I'm like, that's not the way this works, right? Like, you might be able to convince other people of that, but you're not going to be able to convince me. Yeah, you're just not. And it's just like I've seen it to you. Like, if I was to be convinced of the whole manipulation game, then there was no way I would have been able to call out lumber at its all-time high and saying, hey, here in a little bit, you're going to be seeing lumber back at its normal price and even less than that. I was the only one calling that out at the time. I mean, I don't know, maybe there was somebody else out there, but everybody else was, look at what the Fed is doing to lumber. You know, and I'm like, that's not what's happening here. My understanding of the Fed and my understanding of lumber tells me a very different story, but everybody wanted to slam those two together and say, there's your issue, there's your problem. You don't see it like that. And I'm like, somebody who's in the lumber game and studies the Fed as much as I do, yeah, you're right. I don't see it that way. And I won't see it that way because that's not what's happening. You know? All right, Simon, you've spoken often and insightful about the importance of cutting back on your standard of living to reduce expenses to the minimums so as to save, invest more. Absolutely, Brody. I mean, I couldn't figure out anything else that I could do in my life in order to try and get myself in a position in which that I felt like I could pay my bills on time. The only thing I could do is cut back on my bills. You know, that was it. If I cut back on my bills, and then tried to figure out a way to get more flow, get in a position in which more money came into me, then I thought, okay, well, if I could do that, then I won't have trouble paying my bills. Right? If I keep it low and then look not towards where I can get more bills, like where I can pay more, I look to where I can get more. Right? So cut back on this and go for that. And then when I started doing that regularly, I started finding myself in a position that says, wow, you can actually buy some stocks or cryptocurrencies or silver or put money into the house or do something beyond what it is that you are doing for your money because you have extra money, you know, the money beyond the money you're already making. So once I figured that part out, I'm like, okay, the last thing I should do is get a car because getting a car means I won't be able to get all those things beyond what it is that I'm needing for my life, like rental properties, dividend paying stocks, all the bonds, all the, education or something out there that a business, there's so many things. But a lot of times people are just relying, saying, well, I'm going to show up to work tomorrow and hopefully the government will figure it out. And meanwhile, you guys want to go to the bar tonight? How often do you hear that? I got to show up for work tomorrow. Hopefully the government will figure it out. And do you want to go get a beer? Like, isn't that the common thing? And then people wonder why it is they fail, or why it is it sucks out here. And I'm thinking to myself, it doesn't suck at all. It's just like, it sucks being poor, but then again, people just suck at being poor. I heard somebody say that one time and I thought, man, ain't that the truth? It doesn't suck being poor. Most people suck at being poor. And it's not as bad as people want to make it out to be, because everything is within the meaning that you give it. Like, I think to myself, people are like, oh yeah, dude, that's easy to say from somebody who's, in a position in which that they, are, I don't even feel like I'm rich by any means, but people will look at me and say, oh man, I hear you're a millionaire now. And I'm like, oh, good Lord, I'm not even close. But anyway, it doesn't matter. What I think about is the times then when I was like living on a little tiny hobby farm, right? I mean, we had a little space, we had our chickens, we had the garden, we had neighbors who were raising other things, we would trade. It was amazing experience. Kids were growing like really small, they were growing up together. We had this really tight neighborhood. It was awesome. Right. And I think about it, I hardly had any money at that time, but it was one of the richest experiences that I got. Right. I loved it. I loved every minute of it, except for the depressing feelings of being in debt and broke and all that other stuff that I was trying to come out of. But the actual experience of day-to-day life was actually pretty decent. We didn't have TV. We didn't need TV. We had plenty of stuff to do out there, so it wasn't like we even needed TV for anything. And as far as like, food, I had plenty of food. We were trading with the neighbors and they had plenty. So it was not like, food was always plentiful, and lots of really good food too. So it's like, to me, I thought about it. It was just like, man, that easy life was the best. Like this, when you start complicating things with business and, sales and travel and all the other stuff that goes with it, that you feel like you're obligated in having to do, that you start deteriorating the ability to actually enjoy yourself. Like, what is it that money was really doing? If you're like enjoying the experience and you got good food and you got good people around you and stuff like that, that's it. Like, what else do you need? And most of the time it ends up just getting complicated, as trying to secure that means you're actually running away from it. Right? I'm sorry, I can't go and hang out with you guys. I got to go and do the business. I got to go and make this hustle. I got to go and put all these things together. And then once you achieved it, you're like, oh man, what do I want to do with all this? Just hang out at the barbecue. Yeah. Got to get your priorities straight. What is it that you really want? Some people say, I just laugh at it when people say, oh dude, you're not driving some new truck. And I was like, who the hell wants a new truck? Right? And I'm like, oh, I guess most people do. Not me, because I'd like to have the cryptos and I like to have the other things, but that's not very common, right? Because most people want to show up for work. Hopefully the government will figure it out, and hey, let's go get some beers. Let's go check out the super chat. Where is it? Oh my goodness, look at all these comments. You guys are awesome. So many comments. 282 people watching. Keep hitting that like button. All right, I have a friend that works for West Fraser Timber. Yeah, it's slowed down so bad. Luckily, he is single. I got him a job in Texas. Timber is cheap, but no demand. Yeah, West Fraser is a huge company, a huge mill operation. West Fraser, Interfor, Canfor, Weyerhaeuser. Here locally, we got like Frank's and Sierra Pacific, and God, it just goes on and on. There's tons of them. And what's amazing by it is, like, a lot of times you will hear people say like, well, they just get it. Like, I don't know if people realize how many mills there are in existence out there. There's lots. Like, right before COVID kicked in, like in 2018, they were milling a lot of lumber up in the British Columbia area. They were going in through salvage mode because they had this pine mountain beetle go up there and infestation and just wipe out a whole crap load of their trees, which basically killed them off. Now they're standing, but they're dead, right? And so what are you going to do? You just either, forest fires or rot. So might as well cut them down and mill them up. So they were in salvage mode, which essentially meant that they had lowered the stumpage fees to an incredibly low number. here in the United States, we don't have like the same operations that they do in Canada. In Canada, like in order to cut the trees, they have to pay the government. So it's a stumpage fee, is what they refer to it as. It ends up being an input cost going into the mills. Anyway, they lowered these stumpage fees to take advantage of the fact that these trees were dead and they should mill them up and get some use out of them. So there was a lot of lumber coming out of the British Columbia area. And you have to think about it. If they're not using it, where does it go? It has to flow. So just like water, it flows into the Pacific Northwest and then out from there. And it flows, everywhere. It'll go over to the eastern part or whatever. But here in the Pacific Northwest, we get inundated with this, huge flood of lumber that's coming in from the British Columbia area. And then again, just like anything else, it distributes out there for the rest of the country to have. But during that time, like I walked around the lumberyard that I'm working at, and it was every single unit of lumber was coming from the same mill. Like I looked and like you can see because they're all stamped and labeled, right? And so I'm walking around and I'm looking, I'm like, holy, like every single unit was all coming from the same area. So the distribution of it was just thick coming into our area. Well, then COVID hit, mass mill curtailments and shutdowns, inventory depletion, boom, right? Lumber is gone. Now, lumber is coming in from any direction you can get it, right? It's just from get it a little here, a little there, and just kind of grab it from wherever it can go to try and get it essentially into the distribution network so that it can flow throughout the rest of the country. So as COVID hits, right, mass mill curtailments, and then now the distributors in the hubs and the wholesalers, they're out there reaching and grabbing for every unit they can in order to fill in the demand that is, starting to present itself as the increase from the home builders because of people leaving the city and moving out to the urban areas. The demand for lumber starts to really increase. So they're reaching everywhere they can get it. I'm finding lumber coming from all over the place, right? I walked through the yard at one point and I'm like, there ain't a single unit of lumber here that matches another unit. Like every single unit is from a different mill. Like all of them, and mills that I had never even heard of before. Like I'm looking them up and they're like, over in Idaho, they're up in, Northwest Washington or Northeast Washington or something of that nature. It's like they're mills that are not anywhere near me or mills that I've ever heard of before. And sometimes it was kind of interesting to see the different lumber that comes in from these different places, like just the way it looks. Like there was a particular mill that when we took the wrapping off, it was like this very gold yellow color, right? And it wasn't like ugly by any means, but it was just very peculiar and kind of unique in the sense. So obviously they had a subspecies of fir up there or whatever that had this particular color to it. So it was kind of interesting seeing these different units come in from these different mills, from these different locations. Um, anyway, but that was an experience that I wasn't ready for. It was just like, holy crap, like look at this, man. Every single unit in this yard right now is from a different distributor, or a different mill. Son-in-law will be laid off in August from West Fraser. Will close December. Yeah, there is a lot of talk that come the new year, there is going to be massive shutdowns. So we got about another month, and then like all the announced future shutdowns will be coming into fruition. So it's coming, and it's going to be a lot. I don't know how many. I've heard all of them say it. They're all going to do it at the beginning of the year. It's just like if the lumber prices don't move up, and I mean, I think honestly, I'm assuming that if the November contract did not, produce at least some sort of demand for it, then they're not going to go into the winter making lumber. That's like not going to happen. Simon, do you swing trade? I don't. Boy, you are getting old. Please keep leaving likes, everyone. Yes, please do. We got 323 people watching with 91 likes. Continue to hit that like button. I got to go cut wood in an hour. Yeah. Go get the firewood. I think of here? I think once you get the energy down, prices will come down, demand for lumber will rise. The only thing that I think is really going to cause lumber to rise is the demand for new construction. That's it. And how it is that that happens is going to be anybody's guess. And I doubt it's really going to be coming from the lowering of interest rates. I don't think that that is necessarily something that is going to be in our future in a way that is going to bring any kind of significant buyer traffic to the market that would then encourage the home builders to go out there and start increasing their demand. I don't see any of that on the horizon. Now, if there was something that changed the way that the outlook is going for the home buyer traffic, if there was something that would change that, 50-year mortgages, which I don't even think is actually that much of a benefit. Like I was looking at somebody who was just like, a 50-year mortgage drops like the payment like $200 or something like that. So for somebody who doesn't really care about owning the asset outright, that actually might be a good thing. Like if I was to look to borrow money to buy a property to rent it out, if I could lower the payment $200, that increases my yield on that thing. I never intended on owning it anyway. I just want that cash flow. So it's really a benefit to the property owners who are looking to buy that property and then rent it out anyway. Right? Because they don't really want to, like, owning the property isn't the goal. In fact, that's the furthest thing from the goal. They don't even want to own it. And this is like a benefit to those who don't really want to own it because, again, it lowers the payment and increases the yield on something you didn't really want to own anyway. So whether it takes 50 years or 5,000 years, it doesn't matter. It's just like, I understand from like the working class point of view, that's a very weird way to look at it because we truly want to own it. Like, no, this is our house. We don't make any payments. We own it outright. Screw everybody else. But that's not the way that, property owners do it. Like they don't want to own the property outright. They would much rather have the bank own it and then just take that cash flow out of the middle of it. Right? Let the renter make the payment and then they get the little bit of extra. As an investor, I would take a 1 million year mortgage if it cash flows. That's right. All night. That's what I'm getting at. It was just like, I heard all these people like kind of arguing. I'm waiting for the person to say it. Well, I knew Olnardo would say it, but because he's, he knows it better than probably me. But like the people that I listen to in conversation, at work or at the bar or whatever, I don't hang out at the bar. I call bingo at the bar, just to let you guys know. But when I hear people talk about these particular things, they don't necessarily bring that up. Now, the individuals who do are the property owners, the renter, the landlords. They are the ones who recognize it. And it's just like, yeah, offer me a 1 million year loan. Like you said, the payment would be almost insignificant. They're making the cash flow and I'm taking a yield. Perfect. Don't care, right? They don't care how long that loan goes for. Forest cops are back on duty this week, so I can't cut a bunch of white pine like last weekend. Borrow money to rent, speculating that the rents will sustain and that the economy will support rent sounds a little bit like 2008 2.0. Yeah, I mean, you can go ahead and deny it. Like, I mean, not trying to talk negatively about your comment or anything like that because we all have to be secure in our own process of what it is that we're doing out there. But I'm going to tell you right now that every single rich person I know borrowed money to buy rental properties to have somebody else make the rent payment, right? Or to make the mortgage payment, and they took a little cash flow. Every single rich person I know did it that way. So it may sound like 2.0, but it also sounds like the way that they do it. Right? You just have to be very cautious and understanding of what it is that you are doing. There's plenty of people, most of the people that I know who have done it got punished at some point. They took losses. They got hit. They got hurt. They had to learn their mistakes from it. And to think that you can go and step into rental properties and never screw it up is very naive, right? Like you step into this world with every risk imaginable taking place, right? You have to mitigate that, figure out how you deal with it, learn in the process from it. I even think about my buddy who recently just, shut down a business that he was trying to get up and going. he was really into it for a few years. It took a lot out of him. And I'm like, man, are you going to do that again? He was like, absolutely not. And I'm like, but you learned so much. Like, it couldn't do what you do right. It could do what you do right now. It could do right now. Like, from everything that you had learned over the last few years and the business shutting down, I would not have that knowledge. I would have to go through all that in order to understand what it is that you know. And I don't think he understands or has internalized it in that fashion, like how valuable failing at a business was. Because now you understand the mistakes in such a profound way that you are going to be able to deal with it in a way that most people would end up suffering the consequences from, like you did in the first initial time, right? It's like, man, all the hard work was done, dude. It was like the hard part was done. And I know the devastating effects from that is something you don't want to repeat. But holy crap, man, look at, like, the work was done. And now you can use it. But it's a scary moment, right? Just like buying rental properties, buying stocks, or buying into, a speculative asset of any kind. All right, Gunner, thank you so much for the $4.99, man. All right. They are rich in worldly things, which will not be brought with them. Well, and that's just the thing. Landlords will whine for bailouts again. That works until the economy shifts the bed. When people quit paying the rent, you can't pay the mortgage. Yeah. See, and this is really where I find it pretty interesting in that sense. Like, don't do it because you're going to fail in the future at some point, maybe. Is that really, I mean, is that the strategy? Don't do it because you might fail at some point in the future. Like, they may not pay the rent and then you're screwed. So, you know what? Just sit in the chair and don't do anything. Or you want something that's going to be like, 100% guaranteed, no chance of failure at all. Buy the U.S. Treasury bonds, right? 0 chance of default. Going to get paid, no doubt, contract, right? I mean, that's secure enough. I mean, 0 chance of default. You're going to get paid. I mean, I don't know what you're going to do with the money once you get it. I mean, is that going to buy anything? I don't know. Because it isn't a real asset. It's a promise to pay into the future. It's an IOU backed by some more IOUs with the promise to give you more IOU. All right. But when you own property, when you own silver, when you own actual physical things, and you have a piece of land that you can stand on and maybe protect it with a shotgun, because, really you're still going to be dependent on government for property rights. But when you have something real, now you have something that is outside of that third party, right? And again, property maybe not so much, but definitely when it comes to silver or any other physical item out there. Looking at it in this fashion, then the ability to then distinguish, man, what am I doing here? Do I want to be in a position in which that I am 100% reliant on this rental property and then paying the rent? Do I want to compromise my position in life and say I'm going to put 100% of everything I got into this because I have that kind of faith in it? Or are you going to be in the position that says, hey, I got a lot of other things going on. Maybe I should dabble into the rental properties. Maybe I should team up with somebody else and say, hey, man, I can learn the process of maybe if I team up with 3 or 4 other guys on a rental property. It may not be the best, like, profitable situation, like with money flowing in, but the knowledge that I get from it will be extraordinary. Right? See, it's the way that the mind thinks about it and how it is that you are planning on dealing with your situation. Now, you can be like, oh no, man, I'm doing 100% into this rental property, and then we had a shift in the economy and it failed, and you're like, see, I told you so, rentals suck. To be like, okay, well, okay, I guess you're right. I mean, what am I gonna say? All right. That's not what I'm saying at all. What I'm saying is it's rainbows, unicorns, the way they make it seem reality of the pressure and the people having the nest egg to cover is a different story. Well, yeah, no, but that's like, here's the thing. When right, go back into the essay, Cantillon's essay on economic theory, there's two people who live independently of the state. Right? Property owners and capitalists. That's it. Everybody else is dependent upon somebody else for their existence. And so when you think about it in this fashion, when you think, okay, everybody is dependent upon somebody else's payment, everybody. How is it that you position yourself to deal with that? Right? Can you be in the cash flow of getting the payment? And are you in a position in which that you can deal with the fact that the cash flow has slowed down or even stopped? What do you do in that situation? To think it won't ever come is very naive and dangerous, right? You have to expect it, deal with it, prepare for it, and be ready to then cut back on many things in your life in order to maintain certain debts that you want to keep within your life, right? Got to keep the mortgage going, screw the car, right? This is kind of the priorities in which that most people need to start asking themselves. Or you position yourself ahead of time saying, you know what? I'm not going to get the car because I don't want to have to lose the car. So if I don't get the car to begin with, and then I hold on to that money in silver, and if I build up enough of a silver holding, I can put some into dividend paying stocks. And if I have a decent amount of that, maybe I'll even get into some cryptos or maybe in some bonds or something. This, Nate, you see what I'm getting at? And then if this fails, I got other positions in my life that might actually do well. If you don't condition it this way, then you can expect to be damaged. Like, there is no part of this economy that I am not ready for it to fail. I mean, I don't know if I'm necessarily ready, but at least I've thought about it in a fashion that says, okay, if that was to happen, this is how I'm going to deal with it, right? And I think of many different scenarios. I think of many of those, and I think, okay, well, I have a silver position in case that happens. I'm sitting in cryptocurrencies in case of something, happens within a cashless society, and all of a sudden cryptos blow up and become very popular. I don't know. I have very little expectations. Whatever it is that happens out there, I would think that at least I have become somewhat of have put myself in somewhat of an understanding of how it is that I'm going to condition or be in a condition in which that I can deal with it. And that's it. Like, there's this fails, that does, whatever, it's going to happen. It's not like to think that it won't take place. That's very naive. It's going to happen at some point. Just, are you ready and prepared to deal with it? Do you have family to fall back on if the economy goes back crazy? In which way? Right? Like, in which way? Do I have like I have family, but who's to say what kind of position that they're going to be in? My family has done pretty well doing things for themselves in different ways. Like, we didn't have family inheritance, we didn't have family business, we didn't have like none of that. We all kind of took our different paths and figured it out for ourselves in different ways. And I would have to say, like, for the most part, nobody is like rich beyond our wildest dreams from our efforts that we have taken or anything like that. But nobody is like, suffering in the poorhouse by any means. So we're all kind of normal. Like, if there was anybody out there that was suffering the most, it was me, because I was the one who was drinking the most and in debt the most and doing the worst as far as, like, trying to have any kind of real career minded attitude or anything like that. I was the one who was in the worst position. So once I kind of pulled my head out of my ass on that and stopped drinking and started focusing in on things that were more important in my life, then, things kind of lined up. And so that's really what it comes down to, is that I'm not, I guess, like, at some point I could depend on my family for it, but that's not really like in the boxes of places that I'm going to go to, as far as, like, in case something bad happens. Like, I'm not gonna burden my family. All right, I'm gonna figure this thing out for myself. If it does come down to it, I will burden them. Don't get me wrong. Like, if I ain't got nothing else, I'll be like, hey guys, I need to come in. Yeah. A single mother has one or two kids might have no comment. Yet, if you are a single mother with three or kids, excuse me, you know this stuff. Oh, hey, right on. We're back. I don't know what happened to my phone. It just died all of a sudden. I don't know. I had to just restart the computer, but I'm surprised that the live stream is still up and running. That's pretty cool. All right. Thank you for coming back or being here. That was messed up, bro. Yeah. All right. I have a friend who excavates. He can't find work right now. All right. Yeah, I don't know what happened with the internet. It just all of a sudden just crashed on me. All right. All right. Are we back? Are you guys, is the live stream up and running again? I have a friend. Oh, we already read that one. Buffering, please hit like if you still haven't. All right. Why do you expect more from random people online than you do from your president? I don't expect anything from the president. There is very little that I expect from him. Why would I expect anything from that dude? What is it that he can possibly do for me? What is it that I would expect him to do for me? What, like, there is literally nothing out there that I would expect to come from the president that he can benefit me with. What I expect is limited government, right? That's what I expect. But instead, what we have is people saying, what is it that government can do? Like, here, what can government jump in and interfere in more of our lives with? Because that's what people are asking. Like, what is it the government can do for you? Nothing. Get the hell out of here. Yeah, that's what they can do for me. That's what I would appreciate is if they weren't even around, or this very limited amount, right? Enough to maintain like the peace, enough to maintain kind of trade between the states and stuff like that. But the interference inside of our most of the people's lives, and then the way that they make government interfere in their lives is just so. I don't know why it is that people would do that to themselves. Like I just don't get it, you know. But then again, since it's very difficult to see it outside of the way that it's always been, which is government interfering in our lives, then you really it's hard to say, okay, well, I can actually envision a way that it could be different, which means that government just gets the hell out of the way and just isn't even there. Yeah. Wow, that seems so far off. Can't do that. So let's talk about how it is that government can interfere. Okay. No thanks. Yeah, not really into it. So yeah, the president doesn't have any, like, I don't expect him to do anything for me. Very little. In fact, most of what I see is damaging. Yeah. Because they just don't do anything that's constitutional. You know what I'm saying? If they acted and behaved within the confines of the Constitution, I would think differently. But they don't. And in fact, they say stuff like the Constitution doesn't matter. So it's just like, okay, and if you believe that, then you don't matter. That's the way it goes down. Because if you're telling me that the the Constitution in which the government is supposed to behave, the guidelines behind that, doesn't matter, then they don't matter to me. Yeah, that's really what it comes down to. I just have to figure out how they operate so I can deal with it. Did I see Buffalo Super? I don't know. Let me go take a look. I didn't. Thank you. All right, Buffalo Blanco. Thank you so much for the $4.99. Thank you, All Nighter, for the heads up. I wonder, are banks even going to let investors get 50-year mortgages without being your primary residence? Banks are more cunning than that. Yeah, but what happens after a couple of years? Like, I mean, you see what I'm saying? It's just like, yeah, I bought this place for my primary residence, but now I'm moving. But I don't want to sell the property. Right? So, I mean, yeah, there might be limitations to how quickly you can put that into a mortgage rental property or something like that. Like, it may not be the initial way of going about it. The thing, like, what about assumable mortgages? Like, say you had a 50-year mortgage that you paid 20 years on. Now you got 30 years left on this mortgage, right? Which is going to be a hell of a lot better than somebody's 50-year mortgage or something else out there. Wouldn't that be somewhat valuable to say, hey, man, I got a 50-year mortgage with a low interest rate that has 30 years left on it. You want to assume this mortgage. Wouldn't that have some sort of value to it as opposed to a 50-year mortgage? Um, You'll be cashing that Doge check soon. Yeah, the Doge check. All right. No stimulus checks incoming. Rumors has been going on some time now. I wouldn't, yeah. Good morning. The price of everything continued to rise, and yet wages aren't keeping up. These corporations are taking advantage of us, and this won't end well. Yeah, unless you're buying lumber, right? Because lumber's crashing. Some mortgages are assumable as written in the contract. 50-year mortgages, I would have it paid off when I was 130. I wouldn't even consider it. 50-year mortgages is a giveaway to banks and lenders. Might have the grandkids co-sign that 50-year. Gosh, you guys in the 50 years. All right. If they plan to replace cash with central bank digital currencies and have negative interest rates, doesn't that make BTC the best investment because USD will be much less desirable and BTC is the best alternative? Well, I don't no, I mean, I understand that that's probably the position in which that you would feel that would be like adequate for you. But you have to think like most people are still so wary of BTC or even like think about it, like 5,000 year tradition of gold still doesn't have people like rushing into it when they see that the dollar is losing its value. Even though you'll find people saying, "Oh, dude, quite different. Look at it." Right. I go and talk to the people around me and say, "How much gold? How much gold? How much gold?" And very few of them buy it. Now, granted, I did have a few people around me recently get into silver only because I was offering them up a heck of a good deal at the time that I was buying this truck so that I could acquire this truck. So there was a few people that I know who got it, but they don't actively necessarily go and pursue silver or even think about it. So even if you go into a negative interest rate environment, I very seriously doubt that you're going to find the majority of the people switching over or moving into BTC or gold or anything else. Most likely they will just be like, well, what does the government have in store for us? What are we going to do with our paychecks? Because they need to be guided into whatever it is that's going to happen. They don't make honest decisions for themselves. I'm not trying to be negative sounding or accusatory or anything like that. It's just generally most people just don't have any clue about economics or how it works, right? And so therefore they have to be guided into everything that they do. Get your checking account, pay your taxes, do these things, and all this other stuff. And then they just like, okay, that's what we're supposed to do. So honestly, when it comes time to the negative interest rate environment, if that is to occur, which will probably be very far down the road, like, I mean, you got to get cash out of the system. You got to have everybody accepting these central bank digital currencies. It's got to be actually moving through the system in an efficient way. And none of that stuff has taken place yet. So, like, to, to even contemplate what this would look like in the future is anybody's guess. But still, like, even if it did happen, I still, even at that time, I wouldn't say like everybody's going to rush into BTC or make it a good currency. Right? I mean, it's already a good currency. I'm talking about a good currency to be used inside of daily commerce. That's not going to happen. Like you have to think, if you have an abundant currency and then you have a limited currency, the limited currency is going to get hoarded away. And then it can't be used for transactions because it's being hoarded. Right? All right. What about smart money and central banks? They're buying gold now. They're considering BTC. It serves the same purpose of gold without storage overhead. Here's the thing, enter name. You're not going to be able to do transactions, and that's the problem. So you need a transactionable currency. If gold and Bitcoin were the transactionable currency, then they would be used. Nobody's forcing you to use the dollar. There's not one law that is forcing you to use the dollar. It is your choice. And I don't care who tries to tell you differently. It is completely voluntary. Not you, not a store. Nobody has to accept dollars. Nobody. You choose to do it. Why? Because it's what's available and you want to eat. That's why. All right. So even if you wanted to use gold, nobody else wants to use gold because everybody else wants to go and buy something with dollars because that's what everybody is accepting because it's plentiful. All right. That's the difference. It's Triffin's dilemma. All right. It's Gresham's law and Triffin's dilemma. Once you have internalized those two, then you'll understand why it is that BTC is coming into the economy to be used as a transactionable currency because it'll go away. Like every bit of BTC that I would acquire from my job, from the sale of something, would get hoarded away, and I would push dollars back out there into the system. Right? And if you got to a point in which that there were no most industrious people out there will hoard it for themselves, denying everybody else the ability to use that BTC to do transactions, and they will suffer in misery and die from starvation. As much as you want to believe that it wouldn't happen, that's exactly what would happen, because that's what Cantillon describes happening with gold, right? That's what Cantillon describes happening. If you have an industrious people who hoard all the gold for themselves, everybody else is denied the ability to have the gold to do transactions. They suffer in misery and die until that gold is redistributed back out there to them. All right? Unless you end the gold standard and fire up the printing presses, and then people have all the currency they ever could possibly imagine to do all the transactions they could ever want. That's why we're here today. Now, you should definitely hold it, because it's not like I'm saying, like, I'm not trying to say BTC won't go up in value in the sense that you'll be able to trade BTC for goods and services going into the future, but that's your own personal choice, and there's nothing that's going to happen out there that the government is going to come in and say, oh, hey, by the way, BTC is our new currency, and this is what's going to back everything out there. Not gonna, like, I mean, I guess it could, but it's not going to go down like that. All right. Take a look here, make sure I got all these. Man, look at all these comments. You guys are awesome with the comments. Okay. What are your thoughts on gold and copper charts as a recession indicator? Gold on high and copper demand low for manufacturing. Jeffrey Schmidt gave concerns on this to keep rates where they're at. Well, here's the thing. I don't, gold is reasonable to look at as the safe haven investment, security, all that other stuff. Copper is reasonable to look at as manufacturing, industrious, production, stuff like that. So these are two different environments, right? Two very different things. And so when you see these things moving like this, you think, okay, this is a horrible indication of fear and anxiety and the lack of production, right? And there's a lot of truth that can be told inside of that. So people can look at it and say, hey, this is the indicator in which that is going to be most profound to look at as far as what it's going to indicate for the Federal Reserve and what it is that they need to do with their interest rates, the interest rate setting policy. So if you have fear and anxiety and the lack of manufacturing, then the Fed needs to do something with interest rates to try and deal with the situation. So ultimately, if you are in a situation in which that people are fearing a lot of fear, right, and anxiety over, the economy and everything that's going on, of course, there's going to be no investment or a lack of investment going into production, because why would you, invest into production into an environment in which that you feel is failing? You're going to be moving into the safe haven. Now, on the Fed side of things, all right, let's set it all aside and look at it for just a minute. The Fed has gone through an experience in which that they lowered interest rates to the lower bound of zero. So they took the Fed funds rate and they took it to zero. Zero interest rate policy for like 10 years. It wasn't quite 10 years, but it was like 10 years. The results were not what they were hoping for. So the idea of lowering interest rates to create economic activity that would eventually cause inflation to rise failed. So important to understand that. Like, this is the reason why I even came up with the credible threat theory, is by understanding why quantitative easing 1, 2, 3, and 4 failed to produce an inflationary scenario, even though they took the Fed's balance sheet of $850 billion to over $4.5 trillion. The naive statement of money printer go burr, prices go up, then fails, right, for 10 years. Why? Why does a low interest rate environment fail to produce an inflationary scenario for the Federal Reserve? It's because things aren't operating like they used to. Now, when you take interest rates to zero and you have unemployment fall, typically that would be such an inflationary pressure that the idea of keeping interest rates low would destroy the economy. You would have to raise interest rates in order to prevent the inflation from running out of control. But it didn't do it. Low unemployment failed to produce an inflationary scenario for the Fed. So they can lower interest rates because it doesn't work for an inflationary scenario. Nobody knows that. Nobody knows that. I don't know why. I mean, it's not like history didn't prove it to the people out there. They just choose not to know it or ignore it or just believe differently. I don't get it. But zero interest rate policy failed the Federal Reserve to create an inflationary scenario in order to save their monetary policy. It didn't work for them. But right now, the talk of lowering interest rates, creating an inflationary pressure within the economy is all that everybody talks about. Huh. Interesting. Does anybody want to talk about how quantitative easing 1, 2, 3, and 4 failed to produce the inflation? No. Everybody wants to talk about lowering interest rates, creating inflation. I wonder what kind of impact that's going to have on the mindsets of the people with inflation expectations when that's what they believe. You see what's happened? Like, I don't look at the gold or copper, right? I'm looking at the people and their perception of what it is that's happening out there because that's the monetary policy. Now, it may show up in a gold price going up and the lack of investment into building and manufacturing, and it appears in copper. But the reality of the situation is the people's expectations of what it is that's going on within the economy, because that raises and lowers the neutral interest rate. See, this is where I'm looking. See, I mean, copper's an indicator, gold's an indicator, lumber's an indicator. All these things are indicators out there, but what is it that the Federal Reserve is truly attempting to do? They want the Fed funds rate at neutral. How does it happen? Do they lower the Fed funds rate to neutral, or does neutral find the Fed funds rate? Which one is it taking place? Do people have fear and anxiety and expectations of inflation due to the credible threat of tariffs? Seems to be that way. Like, I look around, that's what everybody's talking about. I don't know how many people came to me and said, dude, how much is lumber going to go up on account of tariffs? And I'm thinking, it's not. It's going to go the other way. No, it's not. You idiot. You don't know what you're talking about. And then here we are, right? Lumber sitting at its all-time low, considering what it is that these Canadian lumber mills are experiencing, completely opposite of what it is that most people had expected out there, is because most people have gotten an idea of what it is that the Federal Reserve is doing with monetary policy that's left over from the past. It doesn't work anymore. I tried to share it with people all the time. I mean, constantly on this channel, I'm trying to share how it is that they are using credible threats, the people's expectations of what it is that's going to happen with the Fed funds rate as the monetary policy. The expectations is the monetary policy. It's not the adjustment. Right? It's the talking about the adjustment. Because it has so much more power than action itself. Right? Expectations mean very little else matters. Moving on. Thank you so much for the super chats and the comments and everything, guys. This is a great live stream. We're really knocking it out of here today. Even though we do have the the disruption with the internet connection. Dr. Copper is a lagging indicator, but it is the least least lagging. I don't know. I paid $45 for a sheet of MDF yesterday. When there is a ping attack, you know it's good info. If as a company you're borrowing at higher rates, you pass that cost on. Thanks for your efforts. I learned a lot from you. Thank you, Bridge. Credible threats or the ones that work now? Half inch 2. San V reservoir has gotten so low this year. Let me cruise back up here a little ways. It's because lowering interest rates makes money more available to producers, and so you increase supply of goods, which should lower prices rather than cause inflation. Well, I think really what ends up happening is that if you have a low interest rate environment, what ends up taking place, actually, there's a couple of schools of thought. Let's talk about Cantillon real quick, because when Cantillon talks about low interest rate environment, it's essentially because the economic activity is very low, and that the people who are looking to lend money out there to get a return can't find anybody to borrow it, right? So they're lowering the interest rates as much as possible to get somebody to borrow that money so that they can get a return on it. All things being equal, if you have a very active economy and people are very much wanting to participate in that, you have entrepreneurs borrowing at a high interest rate so they can get material to sell into the economy to get a return on it. So when you see interest rates elevated, it's essentially saying that the economy is active. When you have interest rates fall, is showing that people are not wanting to borrow money in order to participate in the economy because it must be slow. And again, that's coming from Cantillon's essay on economic theory. Now, when I think about what it is that Dr. Lacey Hunt says about low interest rates, that makes a lot more sense to me than just about anything. Because when you lower interest rates near too close to zero, the return on capital investment becomes negative. So if you can imagine getting a 2% return on an investment that you're getting, and there's 2.25% inflation rate, well, then now you're losing out. You're actually going negative on your return. So it has a negative return at a low interest rate environment. So when you have higher returns, that's actually showing things being different, in that you are going to find inflationary pressures coming from that, as the return on that capital can then be returned back into the economy, and in the sense of economic activity. Most people don't see it that way. They see elevated interest rates as slowing the economy down, to keeping people from participating in it by borrowing money and then, using that money into the economy. So everybody sees it so differently, in from not only from history and what it is that interest rates are saying about the economy, but then how it is that the financial systems are being conducted in order to create economic activity by the lowering of interest rates to get people to go out there and borrow that money. So different, right? Like, if you were to take Cantillon and drop him today and say, hey, man, we got this, elevated interest rate environment, he would be like, great, economic activity must be taking off. If the interest rates are elevated, that's what he would say. But if you have lower interest rates, he would be like, man, there must not be any economic activity taking place. If you were to ask somebody today, an economist, if you have low interest rate environment, what kind of economic activity happening? So to understand why, history to now, to understand that financial market didn't exist back in Cantillon's day. Like, if you didn't have the gold, you weren't going to borrow the money. But now all you have to do is just have the signature. Right? All you have to do is have the signature, and now you can borrow the money. All right. When you lower rates, the economy is in the toilet. Never assume the banks will lend more. If they crash the stock market, you don't think the market would just, like, you don't think people would just like pull their money out of the market and crash it itself? Or, like, do you think if you talking to people themselves, like the market, if the market crashes the market, will that create an inflationary scenario they need also? No, it'll actually do quite the opposite, because most people are looking at their stock portfolio and saying, look, I got $1 million and I have $1 million, because they're looking at their stock portfolio that says $1 million. And then one day they wake up and it says $500,000, and they think, oh man, I lost $500,000. They never had it to begin with. All right. They never had it to begin with. So in the way, it's kind of like a new gold standard. Inflation helps gold. Businesses pass production costs to their customers, and these may be affected by inflation pressures, or they go out of business eventually. What would you want your employer to do? What would you do? 47 years in the industry, from logs to retail, from laborer to sales to executive and business owner. This too shall pass. Some businesses do provide wage growth. When I worked for the feds for 6 years, I got little to no pay adjustments. Yeah. Do you think the K-shaped economy will stay like this for a long time? Stipulation, maybe. I don't know what could possibly reverse the K-shaped economy. So basically, unless you have an ending of new debt issuance, then you're going to find new debt issuance constantly pouring into the economy, which will be the separation between the rich and the poor, which is the K-shaped economy. So no, I don't see any reversal to it. I don't like a reversal to it would be like good manufacturing jobs being back here, or just a living wage jobs being plentiful, but it generally would have to come from being a manufacturing state in order to produce the goods and services, the real goods and services out there to provide to the world in order to get a return on it. Like the K-shaped economy is only going to get worse from here. Like the people who have will have so much more than the people who don't. And the people who don't will be wondering what in the hell that is that they could possibly do in order to acquire what it is that they need in their life. Because it's going to be like to the point that they're going to be like, man, I work so much, and yet it doesn't buy hardly anything at all. And they're not going to understand why that's happening. And then they're going to blame. And by blaming, they're not internalizing the situation. They are hoping and wishing and dreaming that something is going to change. And they're going to suffer the consequences. And that's going to be the majority of the people. And I don't like seeing it. I don't want it to be that way. But then again, I can't stop it from happening. I can just see it taking place. So now we have to, as individuals, figure out what it is that we need to do to position ourselves in accordance with that. Because we know that our day job is not going to keep up, right? The bills are going to become harder to pay. The acquiring of what it seemed like a normal experience, like houses and cars, that's going to get more difficult as time goes on. Your day job is just not going to be enough to cover these things. Now, there's a couple of reasons for it, but ultimately you just have to know that it's happening, right? Now, if you want to go and look for the excuses, the reasons, and then try to develop some sort of plan to combat that in the sense that we can all rally together and sing kumbaya and change the way that the government and banking system is going to operate, good luck. Go for that. I'm not on board, right? I mean, thank God stuff like that, but I have very little expectations of that succeeding. What I do expect is that I can position myself to deal with the fact that it's going to occur, right? That I can put myself in some sort of idea that I am going to have a return on my efforts. I know a lot of times people say, dude, don't buy rentals, don't buy stocks, don't buy bonds, don't buy, and then pretty soon you don't have anything, and then don't be in cash. So you're standing there butt ass naked with nothing, right? Because you don't know what to do. So understanding that anything can fail at any given time, and that if you are in a position that can fail, what is the opposite of that position? So that if it does fail, this will succeed, right? If I'm going to be in a cash position, maybe I should have some gold. If I'm going to be in rental properties, maybe I should also be in dividend paying stocks, right? I mean, just something out there that is going to be different from what it is that you have, that may have an opposite move. It may have maybe in the same move. It may both fall together, but then, that's just the position again that you have taken in it. Probably the same reason why both of them rose together. I don't know what it is that people need to understand about that, but there's no changing the fact that this K-shaped economy, right, where you have those who have and going to continue to have and have ever increasing amounts, and the ability for the people at the bottom end to try and acquire something that is going to get more and more difficult as time goes on. That's the case. That is the situation. And it may suck for a lot of people to hear that, but then again, I mean, life isn't fair, so I don't know what to tell you. go listen to somebody else who's going to sell you on some sort of fantasy that you can fix it. Like, oh, we can get the rich people to pay their fair share, or some stupid comment like that, right? It's not going to work. Like, have you found, I mean, I can see and hear that there's never been a time in which that the rich paid their fair share. The only time I ever saw when rich weren't rich anymore is the redistribution of wealth due to pain and misery caused from the collapse of the economy. That's when they pay their fair share, and nobody benefits from that. Everybody suffers in pain and misery at that point. Maybe some people just want to see the rich suffer in pain and misery because they feel like they're in pain and misery themselves. And so therefore, they want everybody to share in that pain and misery. And so they're okay with it. Right? They're like, yeah, let the whole system collapse. I don't care. Right? And it's because they really don't. And I know I kind of felt that way at one point when I was studying up on the New World Order and trying to understand all the conspiracy theories out there that were taking place. I very much felt that same way. Hey, my life sucks, so let's make everybody else's life suck too. Yeah. I mean, what do I care? And then I realized, man, that's a horrible outlook because the things that I'm thinking and feeling and understanding and believing inside is now coming out as a reflection of reality. Man, maybe I should change the way that I'm thinking and feeling about things so that I can have a better reality. Oh, look what happened. That's weird. All right. The Japan trade carry is coming up, weakening the dollar. What does that do for the economy? To those, what I mean, I don't know. All these people lost at the other, like a while back when when these currency trades start to unwind. I mean, a lot of times you will find like devastating effects for some people who have positioned themselves during those times, but for an actual like full on occurrence to shift the way that the economy is happening, I mean, unless it was like some sort of complete collapse of their entire thing going on, all I see is a bunch of frustration and aggravation for people who have positioned themselves in a way that they weren't prepared for. But as far as like a shifting, like you have to think, what is it that you're asking? Like, is there going to be a shift in the inequality? Like, are the working class jobs going to get better? Like, is the work going to keep up with the prices or something of that nature? I don't see that happening. Shifting. I don't think that's going to change. Can the can the way that people conduct themselves as far as like the distribution and the agricultural products and all the other stuff that kind of goes around yeah, absolutely. Like those things can happen all the time. The partnerships, the industries, those kind of shifts happen quite a bit. But when it comes down to the profound impact for us as an individual, like, what does this mean to me? Not just like, what does it mean for like, the banking system, whatever. Am I going to be able to show up, get my paycheck, and then provide for my family? Is this what's going to be the result of this? Nope. I can guarantee you not. I don't care what little game they play. They can be creative and all the experiments within the financials that they want to, unless you are producing real goods and services, assets, like like real ones, not just some fake bond out there that promises to pay into the future, but real assets, real goods and services out there, then there's really no hope. And you can see that the United States is drifting further and further and further away from that. So why is it that we would have some sort of benefit to the people out here to live some extraordinary life when we are not producing goods and services, but instead trading paper promises to pay into the future with more paper promises? Like, I don't know what kind of creative financing they're going to do to fix that. They can't. Right? Rearranging deck chairs doesn't work. Right? You can make it appear as if something is taking place, and you can be like, see the numbers, and you'd be like, okay, why is it that an average job that used to be enough doesn't do it anymore? And people go like, well, I don't know. I'm not really exactly sure. Maybe if we rearrange the deck again, maybe if we rearrange the chairs and come up with some more creative financing, the real goods and services will start being produced here again. No, they won't. They won't because you're too high of a standard of living. Period. That's it. I don't care about the creative financing. I don't care about all the other things that they do out there to try and say, hey man, look at these numbers, they're working out for us now, because that it doesn't produce goods and services that you can then trade for the benefits that are coming in those envelopes or those digits on the screen, whatever it is. It's all folks. Trump has a 50-year mortgage that is going to come into effect, and you too can afford a house again. I don't know if you really can, because like, you think about it, that 50, like I was looking at some of the numbers, and they were saying like a 50-year mortgage would like lower the house payment, like an average house payment, by like $200. And I'm thinking that's not going to benefit anybody except for the person who's looking for a return on yield. And then that $200 actually means something, looking for that yield on it. All right. Let's see here. All right, Dave Johnson. The U.S. makes the destructive killing mechanisms or weapons of death. Number one arms dealer in the world has ever known, but cars, no, they can't really make good stuff. That's not true, Dave. We make really good stuff. The only problem is that we can't sell it for a price that is going to be profitable without charging an extreme amount for it. So we build incredibly luxurious things, but that's it, right? Because if we try to build anything outside of absolutely the most luxurious, we can't compete, right? But we can build very, very high-end stuff, right? Because that's the only spot that we can actually compete in. Look, think about it. Like most of the cars that they make in the United States aren't cheap. And they're almost all of them are very expensive. I think the average car now here in the United States is like $50,000. And I'm thinking, holy crap, $50,000, it's just like I don't even think I spent $5,000 on all my vehicles. It was $3,000 for the Suburban, and that thing cost me like $1,000 to get up and running, and that one was $1,200. So yeah, vehicles, right? And new ones that are $50,000. I mean, holy crap! Who the hell can afford these things? Only the rich, luxurious experience of the United States, right? Anything with nutritional label is bad for you. All right, Midwest region I live in, you see 3 stories. Oh, the Midwest region I live in, you see 3-story apartment complexes going up. Description, cheap, ugly, fast. Yeah, I was thinking about that too. Like the other day, somebody was like, oh, dude, you should come to my area. There's buildings happening everywhere. And I'm thinking, you can see a lot of building happening here in Astoria as well. Right. Astoria has a ton of it happening. The hospital is major expansion. I just had a huge medical clinic get put up across the street from where I work. It's opening up here, I think, at the end of the month. We got the museum, we got apartment complexes, we got all kinds of really just booming all over Astoria right now. And I can imagine here in about a year, maybe a little bit more, like the hospital might take a little long. Once those are all that's it. I don't know of any other new major projects that are coming. And those ones started years and years and years ago. They're just now coming into fruition. So it's not like the economy that is kicking ass today created this booming building environment. That started years ago, right? It's just now coming into the position in which that you can see the physical thing actually happening. So now when I think about once this is done, like once these buildings, the museum, the hospital, these apartment complexes, this medical district, all this other stuff is all completed, I don't see any other new projects that are in the works. Now, I'm not saying that they're not there isn't plans for some. There is ideas, there's lots, there's areas, but nothing is really showing up, right? So once this is done, it's done. And it's the idea of new projects that are coming into can't see. This is where the problem that I think a lot of times people will step out and they're like, dude, you're just a Portland mindset, Pacific Northwest, liberal moron. And I think that is so. Somebody starts to label you as something like, man, have you ever heard me talk about the Constitution? I can run circles about most conservatives when it comes to Constitution and the ideas of what it is to be free from government and stuff like that. I mean, liberal is the last thing on my mind, right? But yet people just think, well, you're in the Pacific Northwest, so this is your experience, and this is what you get, and this is what you see. And that's why you are saying the things that you see. If you came to my place, you would see something totally different. And what I think about is the things that you cannot see yet, right? new permit issuance, new housing starts, demand for lumber that is not just here in the United States, but from British Columbia all the way down to the southern part of the United States. This is not isolated to my Portland mindset area, right? This isn't the way it's going down. Now, people who have taken that belief, who have pointed the finger, labeled me in that fashion, they are so narrow-minded on the economy that they could never, ever, ever possibly see the monetary policy coming from the Federal Reserve and how it's impacting the general population, how it impacts the individual, how it impacts the inequality, how it's doing all this other stuff, because really, it's the Portland mindset that got me saying this. You see? It's a huge difference in what it is that people think out there. I mean, I look out at my town, I'm thinking, dang, man, there is a lot happening here. Look at this. It's going to be beautiful when this museum's done and this big old hospital's done and these apartments are all up and completed. It's going to be nice, they're going to be nice. Right? I look at it as that, and I'm thinking, is there anything else coming? No? Interesting. Doesn't lumber going down threaten to security of your employment? Yeah. Yeah, I guess, yeah. Two failed lumber. I mean, it was essentially 3 lumber yards because one of them had 2 yards, right? But I worked for 2 failed lumber companies. And, yeah, it threatens it. Absolutely it does. Now, the way I think about how it is that businesses were operating when they got shut down, one of them was a corporation. Had several locations all over the Pacific Northwest. The whole corporation failed. The other one was privately owned. It was 2 yards. But again, when things slowed down, they couldn't keep up. They shut those yards down. Now, the difference between the first one and the second one is the first one was a corporation. And, once those people corporate, they don't care, right? There's nothing personal about it. The second one, the guy owned them outright. Like, this was, he didn't own them outright, but these were his yards. I mean, the family owned them out there to the bank, and the bank eventually came and said, hey, you leveraged them out there, you borrowed all this money, you expanded to operations, and now you can't keep up and you're failing, right? So this was a malinvestment. Both of them were essentially malinvestments, but one of them was from a corporate level, which is just basically like, whatever. And then the other one was just a really bad business decisions when they were looking at things really, when they were ramping up and everything was going awesome and there was this huge building boom taking place, through 2005 and 6 going into the great financial crisis. When those were happening, man, all this money's rolling in. Yeah, he expanded operations. Only during the great financial crisis couldn't keep up, right? Boom, things fell. Now I work for a guy who's owned this lumberyard, his family, since the 70s, right? And now, if you ever gone to my yard, it is old. It is old, right? In fact, it's the oldest lumberyard this side of the Mississippi. Now, something interesting about this particular ones is the boss is very, how do I put it? It's the only way I can say it is he's particular about the way that he conducts himself and his business, right? And so when I think about what it is that he's doing differently from what these other people are doing or had done, is they had done something that elevated the entire, like they revamped the equipment, the yard, they did all this stuff, and then created this huge amount of debt that they had to service. Right? The guy I work for now, he doesn't do it like that. Like, he uses debt, but he doesn't do it like that. Right? It's a whole different game that he plays because he's been in this for a long time. And as is just him, he's not a corporation. He's not, having to bow down to, shareholders or stockholders or anything else like that. It's just him and his own decision making. He really runs things in a much tighter ship than what most lumberyards or corporations would end up doing. Right? So, yeah, it's a different experience. Like, I've worked for corporations, I've worked for private individuals, and I've worked for 2 different mindsets when it comes to that too. Theo, please misspell cuss words. Yeah, if you could. As if these lumberyard walk him into their private business finances. Privately owned hospital or healthcare facility. Many areas have reduced hospital bed capacity and yet have built gigantic healthcare facilities. Are they killing zombie corporations right now, or are they setting up for new ones? Well, I would only assume that zombie corporations are having the legs hacked out from underneath them, considering the elevated interest rates makes it in a position in which that it makes it very difficult for them to continue to operate. Zombie corporations generally have increasing debt in order to keep their operations going. That's the point of the zombie corporation, right? They can't function on their own profits because there is no profits. And so the only way they can get money is to borrow more money into the future. There could be zombie people, right? Same thing. Where, like, people who are using credit card debt issuance, in order to make the payments or something like that. Those are essentially zombie people. They will get to a point where they are no longer able to function and then they collapse, right? And then it fails. So elevated interest rates, I'm assuming, are hacking out a lot of the zombie corporations that are out there. And in fact, this is something we kind of predicted here on this channel when the recession, as I was trying to claim it, saying that when the zombie corporations fail, all those people who are laid off would go to work at the service industry. And even though it's a job serving beers or flipping burgers, that doesn't pay nearly as much as the $100,000 a year job they have working at the zombie corporation. It's a job, and if it's a job, you're not marked as unemployed. And if you're not unemployed, unemployment doesn't rise. So here we have this low unemployment environment, even though we have these mass layoffs taking place. Right? Kind of very much like I had predicted. Yeah, it really is. Because if I come out and I do some kind of crazy superficial video talking about how everybody was going to starve and die and, famine ripping across and bankruptcies mass galore, and I show all kinds of evidence of that happening within news articles and stuff, these videos would just take right off. People love to have the hell scared out of them. They want to know exactly how they're going to die and how they're going to lose all their money. And if I do videos talking about just those things, anything else other than down with the government, down with the, and I put out videos constantly like that. Oh, man, you know how well they do? Like, I made thousands of dollars one month just doing fear mongering titles. Like, I didn't change anything about the way I was doing content, but like consciously thought, what is the scariest title I could come up with? And people were commenting on it. They were like, dude, what's up with the titles? And I'm like, I'm just doing a little experiment here. And sure enough, it works so well. So well. Like, I even have a hard time not trying to do it now, like coming up with triggers, just because I know how well it works. Like, I don't have to change anything about the content. All I have to do is just scare them with the title. That's sad. That's really sad. But it's the truth of it, right? And that's why YouTube is the way it is. It's why newspapers are the way they are. It's why most people who are very popular on the internet don't share real good, truthful information. They share information that is going to get noticed. And that's, even on itself, just even talking about it, I could see that, 50 people just left. Scary cherries. The truth is good enough to scare. What's up, chat? All right, MRider777, do you think 55-year-olds coming back into the workforce is going to create a bad jobs number? But it doesn't really matter. They look at that anymore. I would not waste my time with television. All right, the powers that be will do everything they can to avoid deflation. Oh man. Oh man, won't they? They will do everything to inflation. Deflation is the biggest nightmare. So scary for them. Like, people up at night. Not inflation. Inflation, they're totally cool with inflation. Yeah, they like it. They like inflation. They like it and they want it. What time is it? And I got It's not even 10 o'clock yet. Man, we got an early start today, didn't we? Simon, why are there all these BTCs and ETF treasury companies out there now? Well, I would only assume it's because you have an opportunity to sell sell any kind of product, you make a commission on it. So if somebody's out there saying, dude, I want to buy a BTC product, they'd be like, hold on one second, let me get you something to buy, and so they just develop all these different, securities and ways of being able to make a commission or a fee off of it. All right, why are they doing it is, ultimately it's because the popularity of it is happening. Like, I think the biggest concern that would really come up for most people out there is the question is BTC going to be the next dollar or the next currency or the transactionable currency? No way. Not, if it is, the fact there's going to be massive pain and suffering and of it. Right? So don't look for it to be like a good thing. Like if it's happening, that's a scary thing taking place. It is bad, right? It is a bad thing that is happening. Now, if you're in that position, don't get me wrong, you might have taken a position that's awesome. You'd be like, nah, dude, it's a good thing. Look how awesome my position is. Yeah, that's great for you, but the rest of the world is sucking, right? And that's the difference. Like, I don't look for an environment in which that I am going to be super successful and everybody else is going to be suffering the consequences. If that's the case, that's not something that I am like, oh, are we excited about that? This is like, no, I'm not. I'm not excited about that. Now, don't get me wrong. I have some BTC, and if it does occur and it goes up to a $400 million and I'm sitting on a half Bitcoin, I'm pretty happy about that. But I'm probably not going to be happy about the things that I'm seeing out there in the economy. And that 400 million or 200 million or whatever it is probably not going to be as awesome as it sounds. Yeah. All right. Do you think the new Fed speaker will be a yes man to Trump? No. I literally that is not even something that I would even consider. Like the Federal Reserve could care less about the president. They really can. Their monetary policy, like as I've been studying monetary policy for the last 8 years here on this channel, and then the studies that I had done before that, and then the research that I do going back all the way to, early 2000s, the strategy that the Federal Reserve is on right now is not dependent upon the administration. Zero. Nobody wants to believe that. Nobody is wanting to consider that. The last thing in the world that will ever change anything is the Fed speaker. That will not change a single course of anything out there as far as strategies amongst anybody. The speaker literally will change nothing. The only thing that will change is the voice that you hear communicating about the FOMC. It will change from Powell's voice to somebody's new. But the ultimate strategy, decision making, and all that other stuff will not change any. They are on one mission, right? Raise the neutral interest rate. If they can stand still and have that neutral interest rate meet them, that would be even better. But instead, the neutral interest rate is probably going to max out with the elevated inflation expectations coming from tariffs that's coming to an end. Most likely, the neutral interest rate won't be going much further from here. This understanding doesn't have anything to do with the president. Right? The credible threats of tariffs, people are like, well, what about that? If it wasn't tariffs, it would have been something else. Right? And whether it was the president or some other president, we still would have had some sort of reasonable understanding that elevated inflation expectations would be persistent within the economy, because that's essentially what I had predicted 5 years ago. If they could keep the supply chain broken, I don't know how they were going to do that. But if they could keep the supply chain broken, then you can keep the inflation expectations elevated, and that will continue to raise the neutral interest rate. I didn't know it was going to be from credible threats of tariffs. Right? There was talks about it. I just knew that it was going to be a broken supply chain, one way or the other. Self-inflicted by tariffs, self-inflicted by war efforts, self-inflicted by shutdowns, self-inflicted somehow or another. Don't distribute, don't sell those things, don't do what normal economists would normally think would be a normal thing, right? Don't do that. And if you don't do that, then what you will do is increase the inflation expectation and pull the neutral interest rate higher. That was the goal. I didn't know how they were going to achieve it. I didn't know it was coming from tariffs. I didn't know it would come from war. I didn't know it would come from COVID. I didn't know it was going to come from all those other things. But I did know that they wanted elevated inflation and inflation expectation to raise the neutral interest rate, because that's what they had communicated years ago. Now that we have it, it is not a surprise to me. None. Let's check out the super chat. Thanks for the stream, UE. If low interest rates are deflationary, why weren't interest rates kept high after '08? Because the neutral interest rate, right, is too low to the lower bound of zero. That's why neutral interest rates didn't stimulate the economy at the time. Lowering interest rates will stimulate the economy. It will create economic activity out there, right? And when you think about the interest rate environment coming from Cantillon, that's free market forces taking place, right? So now you have free market forces, and then you have government intervention, financial intervention. Right? These are two different things that are happening out there. So when you lower the initial interest rates, you are going to find booming effects that are taking place in that as the interest rates are moving into the economy, and advantage of that, more money starting to spill through the economy, right? Money velocity starts to pick up. So understanding that the initial dropping of interest rates is very stimulating to the economy, but ultimately low interest rates is not a sign of economic activity happening out there. It's actually quite the opposite. Okay? But the initial dropping, that lowering of interest rates, does have stimulating effect. Low interest rates is a bad sign. Now, when we think about the neutral interest rate being very close to zero, the Fed couldn't drop interest rates far enough below neutral to even stimulate the economy anyway. Right? That's why they were lower back. The belief of what it is that the money printer was going to do, and especially the forward guidance being delivered into the people, created the effect that they were looking for. It just wasn't enough, right? And that's the difference inside of it. Learning lumber futures now slowly. Thanks again in UE for what you do. Yeah, you bet. Thank you, Mom, for the $4.99. And thank you, Eli, for the $4.99 as well. Did I miss any others? I think we got them all, didn't we? Yeah. All right. Maybe you don't need to control the sea to control the riches. I don't know. Something to ponder. Whoever commands the sea commands the trade of the world. Whoever commands the trade of the world commands the riches of the world, and consequently the world itself. Yeah, and that's actually one of the reasons why we had like the tulip mania, right? So in Holland, like essentially these people were the shippers of the world. Like they distributed everything, and by being you don't have to manufacture anything. And you don't even really have to be the person who sells anything. If you're the one who's transporting, think about all the new money that comes in. Like if you have perfected shipping and transferring of goods, and people are paying you to transfer goods, think about all the new money that comes in from that. Like you don't have to manufacture, you don't have to do anything. All you have to do is just distribute and take the money. That's a lot of new money that pours in. Well, that's just one of the reasons why we had, or why the world experienced that tulip mania, is because there was so much money and it started flowing into a particular direction, and people saw that and they're like, oh man, we can get ever increasing amounts of returns off these tulips, right? But it wasn't real. It was just the ability to do it because of all the amount of abundance of money that was in the system. It's like whether it was tulips or something else, the speculative move inside of people's greed and being able to deploy their money into having some sort of return, and seemingly never ending of new money pouring in. Once it turns off, boom, it's over, right? It's just like it was never any value to begin with, right? It was just speculation. Listen to Dane Wigginton live today for more bad news. Tulips are going up forever. Trump is the yes speaker for the Fed. It's the other way around. The Fed is the new world order. It's our leader, not the president. Um, yeah, it's kind of scary to think that 12 voting members or 19 people essentially on the FOMC have more impact on the individual lives of the world, of the people of the world than I can think of at any other organization. Like the decisions of the FOMC literally impact every single person in the world. 19 people, 12 voting members. That's crazy to think, you know? And most people have no idea who they are. Like outside of Jerome Powell, like it would be very difficult. Maybe Lisa Cook, because she was in the paper a lot. John Williams, because he's the New York Fed pres. Michelle Bowman, because she's really popular there. But outside of that, it would be very difficult to find anybody who would ever be able to pull a name out of the Federal Reserve. Or even if you mentioned one of the other names, most people out there would have no idea who that was. And these people have more impact, more like power over an individual than any other decision anybody else makes. It's crazy to think, right? And I think that's part of how they're able to do a lot of what they do is because essentially they're operating in secrecy, not entirely, but since nobody really goes and researches or investigates it, then it's essentially it's a secret. uh, what's the deal with the push for stable coins in the U.S.? The push is to essentially remove cash out of the system so that they could take interest rates into negative territory. We've done a few videos on that, and that's the big push. That's the reason. Like all the draconian stuff, the taxing and tracing and control and all that other stuff, that's all part of it. Like that's not to be denied. That is part of it. But the main purpose of a stable coin is to remove cash. And by removing cash, the banks now have the ability to run into negative interest rates. So with cash in the system, negative interest rates isn't entirely feasible. All right. Now we've had like other economies in history and even recent history. That's where it took place is in recent history, who've gone into negative interest rates, but it doesn't show any kind of real benefit to the economy. And you know who the first, like, this is the reason why I say like recent, who the first people were to take a negative interest rate on the bank accounts was the Swiss bank accounts. And it was back like in the late 70s that they had put a negative interest rate on foreign uh, people who are depositing from foreign countries into their accounts, right? Because it was strengthening their currency, everybody was sending them money. They were like, whoa, this is causing our currency to get too strong and it's screwing our exports. They literally did not want people depositing money with them. And so they started charging them a negative interest rate on their bank accounts. They were like the first one to do it. Okay? For that intense purpose, to don't put money with our bank. And so it's not like it's unheard of to apply a negative interest rate to a bank account. Most people look at it as fees or something like that, like some kind of nuisance with their bank account, and then that's basically being charged, and then they consider that a negative interest rate. But when it comes to an actual negative interest rate, what the bank is essentially trying to do is to stimulate the economy by getting people to deploy their money into something else, put it into the stocks, put it in the purchase something, go and invest or whatever, but get it out there, get it moving, right? So the negative interest rate environment literally just forces people to not have deposits, and that's kind of the idea behind it is to keep people from pulling their money out in cash, because if you pulled it out in cash doesn't have a negative interest rate to it, so it's a zero interest rate item essentially. So if it's cash, then at least it doesn't have a negative rate, but if there's no cash to take out, then you're forced. All right. This is a day of evil. However, the world is ruled by villains from a Shakespeare or Marlowe. There we go. Play. All right. Open secrecy. Evil has to tell you what they are going to do to you. Credible threat. God made it that way. Libertarians use both sides of their brains. All right. Guys, this was a lot of fun. I can't see how long we've been going because the live stream says that we've been going negative 107 eruption that we had in the middle of it. 320 people watching. That's awesome. Thanks. Kind of love that. We got $44.94 in super chats. You guys are awesome. Thank you so much for all the support for the channel that you guys do, keeping this channel sponsor free. And this is funny. I always blame the Fed for severing the supply chain. It's not the Fed who does it. It's the government who severs the supply chain. But is the Fed wanting a severed supply chain? Honestly, yeah, I think they do. I think that the Federal Reserve is wanting a position in which that the elevated expectations run persistently into the future. Like the problem that they needed to solve was the risk of inflation that was persistently too low rather than too high. That's what John Williams said back in 2018. November of 2018, monetary policy strategies for a low neutral interest rate world. The problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. So if the Federal Reserve had one strategy, just one name, what would it be? To create an inflationary scenario that was persistently too high. That's it. Now, how is it occurring? Anybody's guess. Is it occurring? Absolutely. Right? Because the problem they needed to solve has been solved or is solving as we speak. All right. Right now, Swiss policy rates are posted at 0 and some market rates are negative. Now, I'm not trying to say that you couldn't find a negative interest rate out there somewhere, but I think the actual monetary policy strategy of negative interest rates, like a negative interest rate environment, NERP, all right? That in itself, like trying to forcefully create a negative interest rate, that is not something that I think is typically pushed for a tool within the central banking system. If it occurs, it's not like they're like, oh crap, here it is. But as far as using it as an effective tool, I don't think the central banks have necessarily considered it as like, hey, a policy tool, let's drive this thing home. As it occurred in the past to say, oh crap, we've done so much quantitative easing that it's caused interest rates to go negative. If that has occurred, knowing it has occurred and then forcefully making that happen, I think are three different things. Oh no, I lost my picture. Oh, there we're back. Okay. You guys fell down. Sorry about that. Y'all okay? All right. Thank you. Leaving on a positive note. We're being aware. Have a good day. Thank you, Dave. All right. Deplorable. Xperia, the Dutch auto computer chip provider of 25% of those chips. Dutch, US, China sources. FO problem. We need to ask, where is the money that was printed and why hasn't it been redistributed back into the economy? Actually, M&M, I don't know if you really necessarily want that to take place. Like, the money generally ends up on the big bank's balance sheet. And unless that money is lent into the system, it doesn't really chase the goods and services. Now, if you were to deploy money just into the economy, like, here, everybody get a check, right? Then what you're going to find is that that money enters all channels at the exact same time. And when that takes place, you find a flash in the pan inflationary pressure that occurs from that. It's not sustaining because it's not ever increasing amounts of new money that is constantly being poured into the system. It is literally just a one-time shot. Now, this is the situation we now face, is that people look at this money printer thinking, where's mine? Right? When do I get mine? Right? Now, unfortunately, if you're the working class individual, you have to wait for it to filter down to you. And then once you finally get it, it doesn't really do anything for you because your wages doesn't increase, and yet everything else that you're buying out there has. So that sucks for you. So you're thinking, okay, well, just hand me the money first so I don't have to earn it. Right? But then you have this inflationary pressure that comes from it. So you get the money, you're real happy at it at first, but then the money's gone and you have all these elevated prices, and now you're stuck in a worse position than you were before. So the new money injection into the people isn't exactly the way that you want to go about it if you are the one who's in the working class. You're thinking, man, where's mine? Right? Because the moment that you ask for it, the problems begin. Whether they hand it to you or you earn it, one way or the other, you're going to be miserable from that experience. Now, if you have taken in a position in which you say, no, you know what, I'm going to have first access to that money, and then I'm going to deploy that money into something that is going to have a return, right? So you borrow the money, you buy a rental property, the rent is now paying for the mortgage, and you're getting a little bit of return, and you're sitting up there with the new money saying, well, I had access to it, I got mine. I was in dividend paying stocks. I was in the bonds. I was into something that had a return to it. I wasn't waiting to trade my time, my hours for the wage. I was getting it first. Right? So all that money, that new money, if you want access to it, you have to position to yourself to be in the first in line. And then what you do with it is very important, because people will be first in line and then they'll buy some luxurious experience with it and then put themselves back at the end of the line again, because now they have to pay for that, right? Instead of letting it pay for them. So hold on. Is the supply chain still broken? They cannot get any chips, or do they just have to spend more? I don't people are expecting, but I don't expect country. I don't expect manufacturing to come back. I don't expect distribution all of a sudden just, bring us a whole bunch of new money in. I don't expect any of those things. What I expect is ever increasing amounts of new money, new debt issuance, the people at the end of the line suffering from that, and the people at the top end having ever increasing amounts more because of the new money and the debt issuance that comes in. Like, that's the way it's going to go down. And any other direction is going to be pain and misery for most people to suffer the consequences through. Yeah. I wish it was a different way. I really do. I wish I could give you guys something that would be like, oh, dude, let me give you this hopeful, wishful dream that's going to be like so awesome for everybody to experience with. Yeah. And I don't know. I don't know what that would be. Right? I can't see that. I don't know where that's coming from. But it's not like it's out of the realms of possibilities for you to do something that is going to have a decent life. But you have to understand, you're going to have to take that position for yourself. And that's that's it. And I mean, I wish, a day job was going to be enough. I totally do. Like, I wish my day job would totally be enough for me to provide for my entire family and I wouldn't have to do anything else. I wish that to be the case. 100% of your domestic vehicle is aged. The most American car is Toyota. If you say they have to spend 25% more, that could be caused by tariffs, or it could be caused by the general increase of inflation due to the government printing. So what is it? I'm not sure what the question is. Deplorable. All right. Will we have new manufacturing, but it's not going to be enough, just strategic for dominance? Uh, I mean, here's the thing. The United States produces a lot of stuff. We manufacture here in this country. All right? Like, we manufacture awesome things in this country. We build actually some really, really good stuff. Here's the thing. We don't produce as much as we buy. All right. We don't produce and sell as much as we import. So our exports are in deficit to our imports. That's the problem. All right. You can increase your manufacturing, right? The imports that you're doing because the deficit trade, right? Importing more than you're exporting. So this is a major problem. People say, well, what if we brought this kind of manufacturing, well, yeah, you can bring manufacturing, you can add manufacturing here. And I'm not saying that we don't manufacture. What I'm saying is you don't have enough to compete against the amount of imports. The problem is your luxurious experience. If you didn't have such a luxurious experience, we wouldn't have the deficit trade. We wouldn't have the imports coming in. That's the issue. It's not a matter of trying to bring manufacturing back to the United States. We're awesome at manufacturing. Our problem we face is that we have a luxurious experience. Our standard of living is far too high. And because it's far too high, we can't compete. And so the only way to deal with that is to stop buying foreign production. That's not going to happen. Why? Because we enjoy our luxurious experience. We love it. We want more of it. In fact, anything other than that, people get pissed and they blame the government. And they say, hey, man, you're destroying our luxurious experience. And then people go out there and buy more foreign production. They say, how come my job doesn't keep up? That's the government's problem. Why did they do that to me? And I'm sitting there over in the corner looking at this going, man, you guys, you keep begging the government to do something, and then the problem gets worse, and then you beg them to do it some more. Okay. I saw a video of New York garbage men buying Louis Vuitton. You're absolutely 100% right. Can we self-sustain with our production? Well, yes, absolutely. You have to lower your standard of living and then not increase your standard of living. And then you have to convince your children to do the same thing. And then convince your children that when they have children to do the same thing. And you do that for generations upon generations of people. And then you might find that you can start increasing your standard of living again. Because at that point, maybe the rest of the world have caught up, and now you can compete against their standard of living. So, yeah, there's ways, but you're not going to, offspring are going to hate you for it. All right, the tariffs should be paid by the importer, but it's cheap garbage, so they just make it cheaper garbage to make up for it. We up the price here because the dollar shrank. Bill, I don't know where it is inside of economics that you come up with this idea that somebody other than the end user is paying for it. Hey, you might have an initial charge that says, oh no, they paid for it, but I guarantee you, give it some time and you will pay for it. It will end up on the bottom line. Just give it a matter of time. You, the end user, will pay every bit of it. All right. When you say the supply chain is broken, do you mean government printed too much money, or do you mean shipping lanes have some sort of disaster going on? Well, think about it, man. Like, I mean, just recently, have you heard about like the amount of immigration that has taken place? Okay. How about like truckers? Have you heard about the truckers situation place? Okay. How about like lumber distribution and stuff like the manufacturing of these things? You see how like every bit of this is broken? I mean, I'm just looking at just a small section, and I'm thinking how broken these things are to free-flowing distribution. And I can't find any reasonable excuse for that, but that seems to be what's happening, right? Like, it was just like, well, they're not doing it because of that. And I was like, well, whether they're doing it because of it or not doesn't really matter. That's what's occurring, and this is what's happening because of it. The supply chain is continually to be broken because of it. Huh. Interesting result from something that the Federal Reserve said that they needed. Right? Elevated inflation and inflation expectations. Everything that I see happening produces that. I mean, you think about it, we don't even know if these tariffs are even legal. Isn't it like talk about credible threat upon credible threat upon credible threat? And then it actually has people reacting and doing things and money collection and accounts being set up and all kinds of stuff. And I'm like, are these things even legal yet? Do we even know if they're legal? Like, has the Supreme Court decided that yet? It'd be really interesting to see the unwinding of all this. All right. Thank you so much. SRX74DBN5N. DB5N. Thank you for the $5 or $10. I really appreciate it, man. Truckers like cheap black market, Adderall, and hookers at the Red Roof Inn. Life is shit when humans have to race with supply chains. These chains are too long. Interesting. Okay. So you're saying that when he says it's broken supply chain, he means the government regulations and money printed. I don't know. Yeah, okay. Just loves the money printer. He just thinks that that's it, man. There's nothing else. And I mean, I guess that's okay to look at it that way, but it's just like if you push on that particular direction, like, nah, money printers, what does it is just obvious, then you miss out on so many other things about the economy to understand on why it is that the Federal Reserve conducts themselves the way they are. I mean, the neutral interest rate, where the Fed funds rate is in relation to the neutral interest rate, and how that neutral interest rate is based on the expectations of the market. Like that to me is far more important than how much money they printed. What's the balance sheet at? Like none of that stuff. Like you can find the answers to it, and then what are you going to do with that information? You'd be like, I got the answer, and I'll be like, yeah, but really, like the question should be, how far away from the neutral is the Fed funds rate, and is that moving? Like that is so much more important than everything else. I don't know why anybody would look at anything else. Like any other statement outside of where in relation to the neutral interest rate, after somebody says the Fed should cut, like those two to be put together. And if they're not, then you might as well just be talking about rainbows or something. Right? Because somebody says, oh, the Fed should cut and cut immediately. And my question is like, where do you think they are in relation to the neutral interest rate? And if they give me a blank stare, and I'm like, well, you obviously don't know anything. Right? Like, I mean, I'm not trying to say you don't know anything, but I mean, if you don't neutral interest rate, like, how would that be a benefit if you don't know where the neutral rate is? I don't understand that. But yet, here, 90% of these economists out there talk about cutting rates or doing something with rates and never once ever bring up the neutral rate. How in the world can you do that? Like, how in the world can you possibly talk about monetary policy, interest rate adjustments, and not talk about the neutral rate? How is that possible? Is it? No, of course not. It's not possible, right? Because what they are talking is just completely fabricated information, trying to deliver a perception upon the people because it's propagandized. All information on the media is propagandized, every bit of it. Or else they would tell you about the neutral rate. Like all the information you ever see is so obscured in esoteric beliefs and stuff like that nobody could ever possibly understand it. Not from a mainstream media point of view. Cashiers are making $20 an hour. Sorry, but it's prepay only as they eat boogers in drink. The idea, how many rich CEOs are there now? Yeah, but then again, I think you're blaming CEOs, you're blaming the government, you're blaming all this other stuff out there for like being greedy individuals. But really, to understand it is that there is an underlying economic force that has separated the rich from the poor because of the ever increasing. If we're a manufacturer stuff and then sending that stuff out there to the world, you would not be complaining right now. You wouldn't. You wouldn't give a shit about how much those CEOs are making. You really wouldn't care because you would have your house, you would have your wife, you kids, you would have vacations, you would have college tuitions, you would have all the stuff that you wanted, and it would all happen from a single income. But they're not producing the world's greatest stuff and sending that out there to the world to have the world send you their gold. Instead, what we are doing is waiting for the rich to borrow money and then filter it on down to us by buying hamburgers and beer. It's a sad state of affairs. But once you recognize it and know that to be the case, you can do something about it. You position yourself accordingly. We can keep hashing it over and over and over again, because I'm going to explain it maybe slightly differently than the way I've done before, but it's always going to come out the same. All right? Ever increasing amounts of new money pouring into the system forces people into a luxurious experience, which then brings in ever increasing amounts of foreign production and exports ever increasing amounts of domestic manufacturers, and the rich people get richer and the poor people then wonder what the hell is going on. That is going to continue. Sell hamburgers and beers. No, global supply chains are not a mesh that's falsely assumed central global governance. Yeah, no, I agree with that. Just even understanding like the lumber supply chain by itself is an incredible, like, it's quite amazing on how somewhat, like, not necessarily primitive, not really a whole lot of advancements within the distribution of lumber, right? Like, I don't know how more you can refine it. Like, you can automate the mills or maybe something of that nature, but to try and cut the logs, get them off the hill, get them to the mill, saw it up into lumber, and then distribute that throughout the nation. It's really like, I don't know how, between trains and trucks and forklifts and the equipment that they use, I don't know how you can make it any more efficient than it is, right? And when that lumber industry was absolutely devastated during COVID, and they fired it back up, and they're like, everybody go back to work, start producing. We got lumber at 1,500 per thousand or whatever it was. They were in it and producing it, and they filled that supply chain up like that, right? It took no time at all. So something as bulky and hard and cheap essentially as lumber and wood is, think about how efficient the United States is to actually replenish and distribute that lumber back out there to the economy very fast. However, the time goes on, what we are now finding is that it's not just a short-lived drop in manufacturing. This is depression, right? These are companies going out of business. These are loggers who are not coming back, right? Once they shut down their operations, they shut that shop down. It doesn't just fire back up. Most logging operations are small-time operations. They're family-owned operations. Like, I don't know, there might be like some nationwide logging outfit, but I don't know of any. Most of them are just small-time operations. And so once these people are out of business, then firing up another logging operation doesn't just exactly happen. You have to build this equipment up over time. So again, like, as we see this carry on, the longer it carries on, the more devastating this market is going to be. At some point when the demand increases and the distribution networks try to fill it back up, we're going to find a very depleted market. So can it fill back up? Absolutely. Will the United States fill that back up? You bet they will. How long will it take? A little bit longer than it took last time. And if the demand never picks up, then what? All right. Will more logging operations shut down, more mill curtailments, more, mill shutdowns? How easy is it going to fire back up again? The longer this goes on, the more difficult it gets. I think all the small operations will be a thing of the past, only big operations left. I believe that MRADER 777, and I think lumberyards are actually going to end up falling victim to that as well. There's less and less independent lumberyards. Almost all of them are turning into, big time conglomerates. And yeah, it's just only a matter of time before, eventually, like, even the retailers will no longer be like a individual mom and pop store, but they'll be like big time corporations and stuff. I live in Wisconsin. The few loggers that I know are still crushing it by basically on walnut. Well, and that's just the thing. If you go and you look at the hardwood industry here in the United States, like it's a very different industry than the softwood industry, right? Hardwoods are generally made for furniture and cabinets and, all kinds of fancy things like that. The softwood industry is used for framing lumber. So when you construct a house, all the construction lumber, all the studs, the 2x4s, 2x6s, all that beams and everything, that's softwood framing lumber. Completely different industry than the hardwood industry. Yeah. Even though they're both, trees and mills and logging and all that other stuff, the product that they build are for two completely different purposes. Yeah. Oh, wait, I was trying to catch up, but just realized we're still live. Love this. Thank you, Standard Nursery, for being here. We're only going to go for another, I don't know, 2 minutes maybe. My phone is about ready to die, but we've been out here for quite a while. 212 people watching with 237 likes. Thank you so much for hitting that like button. By hitting that like button, you get the YouTube algorithm to pick up the video, spread it around for more people to join in. This is a really good live stream for breaking down what's going on within the manufacturing, how it is that we can position ourselves for it, and then just understanding monetary policy in general. This is what we're constantly doing on this channel, right? Is to figure this stuff out so we know how to position ourselves accordingly. Totally not negating anything you're saying, just adding some perspective. Absolutely, Mom. If I come on, I really appreciate when somebody says, dude, we should be on the gold standard. That gives me the opportunity to then recognize what the gold standard would mean for us today in a manufacturing state that doesn't exist, right? Or that a manufacturing depleted state will suffer the consequences of being on a gold standard. Having that understanding and then being able to converse about it and then know that if you are going to be in a position of holding gold, you are actually separating yourself from that problem, right? It's the understanding and the meaning that you're giving it. Should we be in gold as an individual? Yes. Should we be in gold as a country? I think that would be very dangerous. Alrighty, guys, I'm going to call it quits. My phone is dying. I can hardly see. It says we're down to 5% on it. Actually, hold on one second. Don't I have? Wait a minute here, guys. I got my battery right here. Forgot I brought it out with me. Right there. Maybe. There we go. All right. Please creatively misspell words, right? All right, but I am going to still call it quits. I just that I'll read a couple more comments before we do. I'm currently in a debt position again. Love those power banks. Yeah, you got it right. Got the financial firefighter going live in a few minutes. Yes, absolutely. Perfect. That's a great time to end the live stream. Everybody, let's join. Before we end the live stream, can you throw a link? Oh, there it is. Perfect. He just put the link down there. Let's all go join him for a little bit and just continue on the conversation over there and figure out what it is that he's talking about so we can just, keep it. That's it. All right. Uneducated Economist, you guys let me know. I hate the algos. How does please creatively misspell words the algo frown? Like actual images, it looks for, or it listens for cuss words, hateful content, anything like that. So it'll scan the comments, it'll scan the videos, it'll scan the images, and all those things either increase or decreases the algorithm as far as spreading that video around. So the more video and deny its ability to spread out there for more people to join in on it. That's, it's pretty easy. Right? I mean, you can, I don't care what you say, just kind of be creative with it so it doesn't make sense. The YouTube algorithm doesn't like it. So the more we can help out by, just not triggering that part of things, the more we can spread this information to people out there so that they can internalize it for what it really needs to, so that they can really use it, in the way they really need it. All right, you got the financial